Hello, chart watchers, and welcome to this Monday, October 8th, Market Watchers Live show with your hosts, Tom Boley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we've got some more selling on Wall Street. The Dow Jones Industrial Average currently down 173 points. The S&P 500 down nearly 19. The NASDAQ getting hit hard again, down 99 points, down below 7,700, and continuing to take out prior support levels. The Russell 2000 also continuing to get hit hard, down 13 points. 10-year Treasury yield not moving because the bond market is closed today for Columbus Day. Volatility, though, is not closed. We can see the VIX moving much higher today, up another 20% and taking out that intraday high on Friday. We'll talk about that just a bit more in a little bit. Leading to the upside today, defensive groups. We've got real estate, you can see, which is up more than 1% today. Utilities also up more than 1%, and consumer staples up more than 1%. So we are seeing some strength in the market. Unfortunately, it is in the defensive areas. And technology, the communication services area, and consumer discretionary continuing to move lower. We saw a lot of that last week, and that is continuing to open up this week. Erin, we're off to a rough start, but how was your weekend? I'm not hearing you there, Erin.
There we go. Sorry about that. I had a fantastic weekend. How did you have a great weekend too?
Yeah, it wasn't too bad. It's still a little humid down here in South Carolina. But I tell you what, back in the spring, well, we really didn't have a spring. We went from winter straight into summer, and I think now we're going to revert straight back from summer to winter. I shouldn't say winter, but next week, I think highs are supposed to be back down the low to mid 60s here, which is very, very chilly compared to what we've been seeing, which is mostly 87, 88, 90 degree type weather. So we'll see. But it's going to be a relief, though, to cool off a little bit.
Yes, I know it's helped us. We haven't had the very hot weather. And tonight I get to go to the opening night for the Ducks at home for the actual NHL season start. So we'll see if we can keep it going.
Who
2
do they
wins under our belt so far.
Cool. Who do they open against?
We are opening against the Red Wings.
Oh, cool.
Yeah, so it should be interesting. All right, but let's get started with the market. I know there's a lot going on. You've got your workshop tomorrow. Have you figured out what it is yet, Tom?
It's a workshop.
It's a workshop. Excellent. Everybody's going to enjoy that. Arthur Hill will join us on Wednesday. Bill Shelby from the mothership of StockCharts.com will be here with us Thursday. And finally, What's Hot and What's Not will be on Friday with Mary Ellen McGonigal. Today's agenda, of course, it's Monday, so Monday setups. We'll start off with that. Tom's got some earnings spotlight stocks for you, and the 10 and 10, the first symbol will be L Brands. And finally, we'll finish it up with the DecisionPoint Weekly Report. I'll let you know what happened last week on the weekly charts and what to expect going into this week. Let's get it started, Tom. News and headlines. It's a beautiful Monday morning. What's going on?
Well, it's beautiful except on Wall Street. Not very beautiful there, but we'll talk about that in just a second. The bond market is closed, but I did want to show you this long-term chart on the 10-year Treasury yield and maybe give you a little bit more of an explanation about why I think we have bottomed in rates and why we are going to continue to see things trending mostly higher, although I don't think we're going to go shooting through the roof in Treasury yields, but I do think we move up. Here's a long-term chart. This was back in the 1980s, and you can see the series of lower lows marked with these blue arrows and the lower highs marked with the red arrows. So every time we went down from that high back in 1981, each time we went down and then we put in a reaction high, notice how the reaction highs are always beneath the prior reaction high. And if you see something like here where we got this double top in here and I don't have an arrow, it's because we never went back down and tested that prior low. So that low, this high are important until we break below this low, which we did back in 1998. Getting down near 4% and bouncing again. This whole pattern, I think, has just changed based on the move through 3% earlier this year, and now making another move up and taking it out and closing at almost 3.25 last week. But the significance to me is after putting in this low in 2012, pretty significant reaction high to 3% in 2013, early 2014. We went all the way back down. This time we did put in an equal low. It may have even gone just slightly lower, which means that if you get back up through that prior reaction high, it begins to change the character of this chart, which was downtrending, and now I believe it is uptrending. On this monthly chart, you can see that the PPO, the monthly PPO, has never looked this strong going back throughout this downtrend. We've had a couple of breaks into positive territory, but nothing like what we're seeing right now. So I think that the extent of this move to the upside is very notable and has changed, like I said, the character of the chart. I believe the downtrend has ended. I think we're uptrending. And so on any pullback in the Treasury yield, I'd be watching this 20-month EMA, which currently is down at 2.68%. I don't expect we're going to go down there at any point. But later this year, if we sideways consolidate and that 20-month EMA continues to rise, at some point we might get a test similar to what we saw in 2017. But I believe, this is why I believe we're going to go higher. So, and the Fed's pretty much told us that. The Fed said that our economy is strengthening, and that's really what should be driving these yields off of record lows that we saw back in 2016, which had gone back and tested the lows we saw in 2012. All right, let's keep moving here. One of the things that I've certainly been watching in the market, and I always watch, is the relationship of the consumer stocks, consumer discretionary versus consumer staples. And I've had questions recently. Am I concerned about the fact that this ratio has been dropping of late? Not really. You got a lot of movements up and down in this ratio. It's not like the ratio always goes up every day. And we had a huge run to close out the fourth quarter of 2017 and then through the first 6 months of 2018. And after you get these moves like this to the upside, it's not at all unusual to see some back and forth action and see consolidation from a relative perspective. If you look back to 2011, after we made a nice move up in the S&P and we had this ratio moving up, we actually had a little bit of an ascending triangle where we went sideways for 2 years in this relationship, even though the S&P 500 kept going higher. I think an incorrect analysis would have suggested that the market was going to go lower because we weren't seeing a breakout here. I think you have to give this time to consolidate, just like you would an individual stock. And as long as it remains in a bullish pattern, I'm okay with it. When we look back, I mean, we've really had a very significant breakout above about 180. If you go all the way back down or back to 2004, that was the ratio that we set as a high during the bull market from 2002 to 2007. So that move right there, breaking back above 180, I wouldn't be absolutely shocked. I don't know if we do this, but I wouldn't be shocked if we went back to 180 and remained in a bull market. So I would not just look at this and say, oh, the ratio is going down, therefore it's bearish. I think we've got to give this a little bit of room to consolidate for a period of time. And I don't think that would be negative. What I would be a little concerned about is if the S&P for the next 6-12 months keeps going higher and we just keep seeing this ratio going lower, that would begin to bother me because I would want to see money rotating into aggressive areas. And with the XLY, XLP ratio moving higher, that's telling you that things are getting a little bit more aggressive. Okay, or at least investors are getting aggressive. I wanted to bring up the chart from Chart Watchers on the VIX that I did. I talked about this a little bit last week, but before I do that, I just want to make sure everyone's aware that if you're not currently a subscriber to Chart Watchers, you can just simply go to the blogs page, this blog articles, and on the right-hand side, you'll see a sign-up area where you can put your email address in, sign up for Chart Watchers. It comes out twice a month, typically the first and third weekends of each month, and there's a lot of great information in there. So I just want to point out, make sure you're aware that it's very easy to subscribe. It's free. I don't know why you wouldn't. You don't have to be a member of StockCharts in any way to get that newsletter, so make sure you sign up. Within the Chart Watchers, though, I wanted to pull up my article because in this, I talked about how the VIX a lot of times will mark these short-term bottoms. And so I went in here and I showed over the course of the last couple of years how the VIX, when it's gotten up in the 16 to 18 range, that's where it has typically topped. Now, we do have, periods back in January or February, and then again in March where things can get a little bit more panicked, and we'll see the VIX move higher. But you can see over the last couple of years, 16 to 18 has been a pretty big level. And if we pull up the current chart right now, you will see that the VIX is currently at 1782, taking out the 1736 high that we saw on Friday, and it is in this range. So the S&P 500 pulling back near recent price support at about 2860. This is an area where we could see a reversal. I'm not saying we're going to, but if the VIX begins to settle back down from here, then we likely have a bottom in similar to what we've seen with a number of these other red arrows here on the S&P 500, with the VIX moving into this range. So it's worth at least keeping an eye on. The other thing I wanted to point out here quickly is that the NDX, the NASDAQ 100, we can pull up the VXN, the VIXN, which will tell us the expected volatility on the NASDAQ 100 index. And notice that earlier today, we went up over 24. And if you go back over the last couple of years, actually, I probably can take this back even further. Let's just go back the last 7 years. But I think when you get into this 24 area, most of the time, 22 to 24 has been tops on the VXN and bottoms on the NASDAQ 100. So just wanted to point out this is a very key area in terms of volatility or expected volatility. And the one thing that you have to know about volatility index and the stock market when it's selling is that when the VIX is going up and gets into this zone, the market can sell off extremely quickly. So it's important that you keep stops in play on individual trades. We'll talk about that in a bit. One last chart I wanted to pull up, though, is on the Russell 2000. And here you can see we are down at the 1620 level, which I want to pull up the weekly chart here because this was an area that we broke out. We had a double top, higher lows. So we had an ascending triangle. We broke out at about 1610 or so. And we are just about down at that level along with that rising 50-day moving average, 50-week moving average, which we have not closed beneath since back in the first half of 2016, so 2.5 years ago. So we're getting really close to a key support area on the Russell 2000. I know we've got a number of upgrades and downgrades, Erin. So what do you have for us?
All right, let's get this started. Yes, I do have a number of them. I was in the process of reviewing some of them and annotating. All right, so let's start with some downgrades for you. First one, William Blair has downgraded Beacon Roofing from an outperform to a market perform. I opted to put up a weekly chart because I could not see any support levels on the daily chart, which I have for 1 year. And as you can see, we've been setting these lows for the year and further multi-year lows. Right now, what I see is this area of support, and it is very important, and it is failing currently. I've marked some areas where you could make a case for some intermediary support on the way down. But look at this PMO top below the signal line. It is an oversold territory, which would have given me some hope. But on a downgrade, I would expect to see this one move lower. Might find itself with some support right around $30. The other downgrade we had was iRobot Corp. Piper Jaffray downgraded this from overweight to neutral. I noted right away this double top, almost triple top. You could make a case for that. So I didn't mark it, but I think you could certainly add that in there. But I used the double top so I could get the measurement. And when I added the measurement here to the bottom, it gave me right around this area for the next area of support, which would be, well, looks like at about $87. But we have a PMO that is of course, accelerating downward on this very difficult drop of almost 10% right now on IRBT, iRobot. But it still has a really strong scooter, so it's hard to get too bearish on it. Might want to watch this one because it has been a really good performer before this. So I might consider adding this to a watch list, but it is on the downgrade side. So, it's probably got further to fall, especially if it's going to hit that minimum downside target there. All right, 5 upgrades for you. Let's just run right on through those. First one, ASMB, Keith Broyette has upgraded from a market perform to an outperform. We're hitting some very important support on the daily chart. And currently we're actually trading below that area of support. So a little concerning, especially when you see this accelerating PMO to the downside. But with the upgrade, the PMO is in oversold territory here. Maybe worth a watch. I'm going to show you the weekly chart very quickly. Let's get a better feel for it. And you can see the PMO is just ugly. It has now moved into negative territory here. I'm not really sure where they're coming from with this upgrade, but you can see we've already fallen below what I would call very important support back here at these tops that we had in 2017. And that does match up with that what we're seeing on the daily chart with this low over here from the last quarter of 2017. Looking here, $20. I sure could see it moving down there, but again, it has been upgraded, so maybe worth a watch. Maybe we're going to find support at this level right now. All right, next one, ConAgra. This one was upgraded, I'm sorry, by UBS from a neutral to a buy, and investors are very excited about this. It appears we're on our way to fill this gap that we had a couple weeks ago at the end of September. The PMO is turning up in oversold territory. The scooter is improving. This one on the upgrade, I think, looks a lot more healthy and enticing than the others that we've looked at so far. I'd look for that gap to fill. I think we could see a run up to that $36 level, if not higher. So interesting on the upgrade here. I do like this one, neutral to buy again. General Electric is on the list of upgrades. Barclays upgraded it from an equal weight to an overweight. And you can see we finally, I'm going to actually hit the annotate button here because I want you to see this trend. This is a pretty long-term declining trend that we were looking at. Now we had a fake out breakout is what I would call it back here in the middle of September, fell back down. Let's see if this matches up. Not quite with a channel, but look at that. We had a declining wedge. That is a bullish pattern. You should look for the breakout, and you should look for a move about the size of the back end of this pattern. So I would say $2 maybe and 50 cents, somewhere in there, added to the breakout point would give you about $14.50. I could certainly see a test all the way up here, just above $15, but that would require a breakout above that 200-day EMA, and it has been a long time since we've seen that area, that area of resistance even tested. So I think we should be able to see a little bit more rally out of this, whether it can sustain a move above that 200-day EMA. I'm not so sure, but at this point, maybe wait for a little bit of a pullback here. We do have the buy signal. The rest of the chart does look pretty good. And two more upgrades for you. Movado, Cowen and Company upgraded it from market perform to outperform. I look at this and I think I see another declining wedge here, but let's go ahead and annotate it. And here we go. So we haven't had the breakout just yet from this declining tops trend line, kind of poked up there a little bit above it. And I'm going to drag this down, and yep, as you can see, we do have a declining wedge. These are bullish patterns, and I would look for the breakout, and again, a move about the size of the back end of it. So you could certainly see a move at least to test that area of overhead resistance at that July low at about $46. I think that's totally doable at this point. And look at the PMO, it's oversold, getting ready to have that buy signal. Maybe you want to hold out and wait till we get a sustained breakout here from this wedge, close maybe above it, this declining tops trend line, or a PMO buy signal, because we're just on the cusp here. It looks like we're going to get something good, and maybe that is why we saw that upgrade come in. BTIG Research upgraded On Deck Capital from a sell to a neutral, and I don't see anything particularly great here. I mean, this is an upgrade, but they're only upgrading it to neutral. So to me, when I hear the word neutral, I think of not being in cash. I'm not going to short it, of course, at a neutral stage, but I'm certainly not necessarily going to be interested in buying. However, we are getting ready to test this 200-day EMA. Looks like that's been the area of support that it's been able to maintain. So keep an eye on this one. It has been upgraded. Might be able to hold that 200-day EMA as support. That's all I have for our upgrades and downgrades. I think it is time to move into Monday setups. All right. Honestly, I ran my scan today. I wasn't too excited. There you go. There are our current picks so far. What we had. Let's go ahead and take a look at those HCA and SNPS. How did we do? Do you know, Tom? Have you looked?
Oh yeah, we're both down, but you were down much less.
Okay.
And I actually picked SNPS last Monday, if you remember, because I didn't own it. But then I bought it on Tuesday, and I really threw everything in. I think I threw it into the downward spiral.
Well, of course, whenever we pick something, that's when you should expect to see it, take a dive. All right, so let's see. HCA was what I had. And I did pick it on Monday. So what are we looking at? Yeah, I picked it near that right there at about 139, I think. So yeah, honestly, it wouldn't have been so bad if I didn't have to count today's 1% decline. But I came in on this one. It was Monday setup because look at this. We had the PMO. It was doing all the right things, looked like a flag maybe. So I can see why I picked it. But then we ended up with that top below the signal line. I would have probably been out if it were a new buy for me. That's just, obviously not a good pick.
Actually, I think the chart looks pretty good on it, and it is in that healthcare provider space, which has been one of the strongest areas. So at least you avoided technology and consumer discretionary with the pick, which really has been hit hard over the last week.
Yeah, that's for sure. Technology has not been the place.
Yep.
And there you go. Yeah, you'd have probably been happier if we didn't have to count today too.
Well, I fortunately I didn't have to count last Wednesday, Thursday, and Friday because I got stopped out about as soon as I got in.
Right.
It went down and it hit that low back on August, whatever, when it gapped up, that huge volume day where it gapped up. That tail to the downside was at about 96.75 or something. And I think when it went down there and tested it, I think it was on Tuesday, it got very close, started back up, I think went above the 50-day. And so I was like, okay, I'm going to go ahead and get in here with a pretty tight stop. But I think it was the next day, or maybe it was, I don't remember if it was Wednesday or Thursday last week, but it was a very quick stop out. And I mean, the one good thing is I'm glad that I had my stop in play. And many of these software stocks are not doing well and haven't done well over the last week. So anyhow, we'll see if we can find some winners this week.
Yes, let's. So I did run my scan today, and I wasn't really thrilled with what came up. This is, of course, there's the one I did. That's a better look. So I was in at 139.88, and it's 137.62. Not great. But you can see, like I said, why I picked it. So with that, what are the ones? So I did not get what I wanted out of my general PMO scan. I did open up the search by taking out the scooter requirement to be over 75, and that did give me a handful. Honestly, not super impressed with them. And honestly, after I ran it the first time, I thought, you know what, today I should run my scan for dogs and put up some short sale opportunities. The only problem is I'm feeling a little too bullish in the short term based on what's going on with the VIX. So I couldn't really, in good conscience, give you guys a bunch of shorts because to me, if we're looking at a 1 week Monday setup, I can't get myself behind that. So here are the ones I did pick though. AMG, JP Morgan, Alerian, MLP Index, ETN. Interesting here. So this one, obviously, I had the PMO. It's been rising for a couple days here. We've got a nice strong scooter in this case. And what I would call possibly a flag on the breakout from this declining tops trend line right here. So I liked this one. I did not pick it. but I think it looks pretty interesting for maybe a Monday to Monday investment. And you can see it's already pulled back after hitting that overhead resistance. It's coming back. Looks like it's going to hold some support here at that 50-day EMA. So I think it could be an interesting setup. That's the one I picked, so I'm going to wait on that one. Old National Bank Corp, ONB. There we go. Another one with a flag. It's in that financial space too, which I'm starting to look at as maybe the one that'll start perking up here very soon. A little bit more than we've seen as of late with the yields rising. But look at that really nice flag on it. I think this one has the opportunity to make that move up to $21, which is why I included it. But I opted not to pick it, mainly because, and I'm going to go and annotate my reasoning here, mainly because it hasn't broken out above this declining tops trend line at this point. Honestly, if I were really, really technically drawing it, you can see it never quite got up there to even test it if I draw this really close. Okay, no, I'm not going to save that. Verizon came up. I thought that was interesting. We haven't seen the breakout yet. A successful one, let's put it that way. We're at the top of a trading channel. So that was why I did not pick it. But as you can see, since I got it in my scan, we actually have a PMO buy signal, it looks like getting ready to trigger here on Verizon. So I think Verizon still looks good. If you're in it, I'd continue to hold it. It's the chart starting to perk up here. The OBV is trending higher, and that I love the look of that PMO right now, coming off of that bottom when we tested that $53 level. So I think Verizon is looking pretty good. WEC Energy, WEC Energy, WEC being the symbol. And there you go, really pretty PMO bottom here. We're getting close to a breakout, haven't quite had it. Notice the scooter is now moving into that hot zone, a nice big move on this rally. But we are getting close to overhead resistance, and we are on a 1.25% to the upside move today. So I don't want to chase this one since it is a Monday setup. Like I said, I would expect to see a little bit of a pullback here, and that would probably be the best entry into that one. But here's what I picked: Marcus Corp, MCS. And I think you can agree. I think this chart looks a lot healthier than the others that I have shown you, and I'm going to annotate. And the first one being this breakout. And, we got the breakout on Friday, and we're holding it. We're getting the trading above it. We're getting a little bit of a pullback, in my opinion, just because we have a lower high than we did on Friday. So I would look at it as somewhat of a pullback, even though, of course, we have a day where we're up over 0.5% here, almost up 0.7%, 0.7%. But look at the rest of this chart. I think it's looking great. You've got a scooter that's been strong for quite some time. The PMO is turning up. It hasn't quite made it up to the signal line. But I think this one looks pretty good, Tom. So I'm going with Marcus Corp, and it is currently at $43.01.
All right. Marcus Corp it is. I'm going to go with Haymanetics, HAE. So let me show you this chart. First of all, it is, it's got a nice uptrend in play. It did pull back last week, but certainly, it got hit pretty hard last week, but it is testing that 50-day moving average for the first time, really since, I think we got close back in June, but really testing it first time since early February. So this has been a stock, obviously, it's done extremely well. I believe it's in medical supplies, and did have a negative divergence recently at this very top. So similar to what we saw back in May and June, you could see the higher prices, that lower PPO, and we went back just about to the 50-day. I can't tell if we tested or got pretty close. But here we had almost the exact same setup. You had the PPO declining, you had prices rising, and now here we are coming back down to the 50 to test that moving average. So I do think you got a double bottom in play, and the good thing here is you can keep a fairly tight stop, which in a market like we're in right now with the volatility on the rise, I think you've got to be able to if you're going to take positions, I think you need to have tight stops, especially if you're a short-term trader. Those maybe who are building positions for the longer term, maybe you can withstand some more of these short-term pullbacks. But I know from a trading perspective, I don't like getting caught in these downdrafts. So I would probably have a pretty tight stop around 106, 107. Probably a close below 106 would have me out, maybe intraday even below 105. But I'm looking for this to be a bottom. We did print a nice hammer on Friday off of some pretty good selling last week. And so I would be looking for a reversal here on HAE. So this is my pick, price of 108.25. Hopefully we'll reverse my losing streak, which is kind of interesting. I think my losing streak here started about the same time. This is not a setup, by the way, but about the same time the Russell 2000 topped, because I do trade a lot of these small caps thinking that the dollar's going higher. So I wanted to be in some small caps. And this index coming down has certainly had a negative impact on my trading of late for sure. But some other stocks, and so I've kind of learned my lesson. I'm going with stocks, at least for now, that have a little bit larger cap in terms of their market capitalization. So they are a little bigger companies. So the other stocks that I'm looking at, one is AMD, semiconductors. And again, I'll just show you this chart. This isn't a setup, but the semiconductors are at key support. If we close below 33.50, which we are below it right now, we could be heading down for 32.50, this double bottom. So I'd be careful. But we've been going sideways here. So if we hold on the semiconductors index, I think that could help AMD quite a bit, which did break out on very heavy volume above this 26 level back at the beginning of September, got all the way up to 34 and has pulled back. I think you can keep a fairly tight stop given the ultimate target here back up near 34. I think the stop could probably be within $1, maybe $1.50 to the downside on AMD. So this one is, at least the reward to risk is beginning to look a little bit better. But getting out of technology, let's take a look at BSX. BSX losing the 20-day. The thing I was watching this one, and the reason I put this on the list, I'd like to see a reversal. So if we get a hammer on that 20-day moving average, I'd be interested. If we don't, then I think we're going to go back and probably fill this gap down around 36.5. So I think we got a little bit more downside, but a reversal and a close back up above the 20 today, if we were to see that, I think would be bullish for Boston Scientific. ABT, Abbott Labs, another healthcare stock, had a beautiful move up, very nice volume, has pulled back and close to that top of gap support and the 20-day. Another one that I would keep tight stop on. A move much below $70 and I'd be out. So I think the key for me is to try to keep my losses on any trades at this point to no more than 1 or 2%. And if we get a market reversal to the upside, great. If we don't get hit too hard to the downside. ISRG, again, staying in that healthcare space. Intuitive Surgical, same thing I was looking at on BSX. I would not be a buyer. This is actually a potential breakdown, but I'd be looking for that reversal on the 50-day moving average because we hadn't tested it since all the way back in April. So if we get a big reversal today, close back up around that 540 level with the VIX maybe topping and pulling back later today, I'd be interested. Barring that kind of reversal, I would continue to watch it. ILMN, Illumina, this is, I believe, in the biotech space. Very similar. The breakdown here has been on increasing volume. I'm not interested in buying it on the breakdown. I want to see the reversal. Here, heavy volume breakout back in July, took out about 318, 317, and we've not gone back to test that area. So if we go back down, can hit that support area and print some sort of reversing candle, I could take a short-term position here. But again, I need to see some buying. I need to see a reversal. Take-Two Interactive. This is another one that's had great support around this 127.5 to 130 area. You can see the tops came in here at 130, top over here at about 127.5. This has been a key area. We are below it. So again, I'm not going to try and be a hero and jump in front of a freight train, but it is a stock that is below support. If we get that reversal, this is a stock that could be traded. And then finally, ALGN, another one. This has been one of the highest scooters, by the way, at StockCharts for a long, long time. The stock has been under intense selling pressure for the last 5 days. It has gone down to a key area of support around 330 to 340 where we've seen support before, but it's another one that if it closes below, given the high volatility, I would be careful. These are the kinds of stocks that can really get hit hard. But if you get a reversal along with the VIX reversing, this is an area to watch from a closing perspective. So for the most part, I'm going to stick with areas outside of software. They haven't been working very well until we start to see reversals. But these are stocks that, again, many of them are below key moving averages. The volume is picking up on them. I would not be a buyer unless I see a reversal later today, and it looks like the overall market is reversing. That is not the case yet. So just some stocks to maybe consider. The only one that I really like here that I would consider buying, I don't own it at this point, is HAE, which is my pick for this week because we can keep it fairly tight stop. All right, and there are our picks for this week. Erin is going with MCS, and I'm going with HAE to try to break my losing streak. We'll see.
Yeah, well, hopefully it'll be a little bit better week for us. I have to say, after I annotated MCS's chart, it's already at $43.12. So at least I think I'm on the right track.
There you go. Might want to sell. You got a guaranteed winner.
Exactly.
Yeah, well, I know the last 4 or 5 weeks for me, I actually went back and looked at my account over these past 4 or 5 weeks, and it hasn't been pretty. The only good news is that I do keep stops in play.
Yeah.
So many of those losses that weren't very pretty at the time have only grown over the past few weeks if I'd held. So it is a lesson. Make sure you keep those stops in play and try to manage the risk to the downside. In other words, try to get in where you are close to a support level where you can keep a fairly tight stop.
Mm-hmm.
All right, let's move on. We are going to take a look at Earnings Spotlight. Ordinarily, right after Chart Watchers newsletter, John Hopkins joins us, but he couldn't make it this week. His son got married back in Maryland. I think he was traveling back home. So congratulations to John and his son. I worked with both of them for many years. His son, Chris, great guy. So happy for him. But I do know that he was busy. I wanted to point out, though, and I'm going to go ahead and show everyone. Let me pull up. Within the blog articles, I know John in his Chart Watchers article last weekend, over the weekend, did make an offer to everyone. So I wanted to bring that up. So let me share that for just a second. All right, so in the Chart Watchers, if you go into the blogs page and then click on the drop-down menu and click on Chart Watchers, it'll bring up this page, and John's was the last one here. If you click this, he had put in here a chart. I thought this was kind of interesting. I know a lot of you out there like to trade into earnings. I know John with earnings beats, they don't trade into earnings, but there is earnings information that I think can be very useful for folks who do like to trade into earnings. And he had put in a chart here on WW Granger, which I thought was kind of interesting, showing how the last 4 quarters, WW Granger had reported excellent results. And each of the last 4 quarters had gapped higher. And John mentioned that they were going to have a free newsletter where they're going to take a look at, among other things, some of these charts and some of the companies, how they tend to report historically. That might provide you some good information if you trade, maybe not. Just, again, depends on your style. But anyway, I want to just point it out. John asked me if I would just let everybody know you could send him an email at john@investedcentral.com and then just type in free newsletter, and he said he would add you to the free newsletter. So I thought along those lines, what I would do is show you some stocks that will be reporting over the next 2 weeks, 2.5 weeks, mostly large cap. I think you're going to know most of these companies. And then from there, I could give you some history on how they've reported. So let me go ahead and bring up some charts for you. First one is going to be McDonald's. And I'm going to go back a little ways. Let's just take a look at a 2-year chart, because I tried to go back the last 5 or 6 quarters on most of these companies to give you just a little bit of history on how they have done with earnings. So don't worry so much about trying to figure out where each individual candle is. I just wanted to highlight what you'll see as I go through here. So McDonald's over the last 2 years, you can see the chart with their earnings over the last 6 quarters, 4 of those last 6 quarters, McDonald's has reacted positively, meaning that the stock has gone higher with earnings. And 3 of them, the stock's gone up at least 5%. So McDonald's does have a recent history of doing pretty well with its earnings reports. And we are moving up, trying to get through a key resistance level. But I think McDonald's is one to keep an eye on. 3M, mentioned this is a company that loves the fourth quarter of the year. So from a historical perspective, might make some sense. 4 of their last 6 quarters, they have gone higher. But you can see one of them where they went lower here back in April. Pretty significant drop. And I think there was another one. I think it was this one back here in July last year. Fairly significant drop. So two of those 6 quarters, you can see negative responses to the earnings, and they were somewhat significant. But the other 4 over the last 6, we did see 3M move higher. United Technologies. First of all, I think this chart looks great. We got a nice little cup here off of an uptrend, beautiful cup, sideways consolidation handle, and then the breakout. And on the breakout, you can see the volume pick up. And now we're back testing almost that cup level. So I think UTX is one of the large cap stocks I think looks pretty good here, technically. They have reported, though, and actually gone down 4 of the last 5 quarters after they have reported. But typically, those moves have not been very big. I mean, you don't see any major gap downs with their earnings report. That was not an earnings report, by the way, back in September of 2017. So most of their reactions have been somewhat muted after earnings. Next up, Texas Instruments, TXN. 4 of the last 6 times they have reported, they have gone down, and including a big drop back in January. You can see on the chart, very heavy volume. That was an 8.5% decline to the downside. And so we've made that all the way back up, got up to the double top, but now we're drifting back lower. I just see Texas Instruments trading mostly sideways here. So from about 96 to the downside, up to almost 118 top side. Currently, we're at 102. Hold on one second. Yeah, I don't know what it is about this time of the year. Allergies run rampant in this part of the country, spring and fall, and just seems like it's starting to get me here. All right, let's move on. ILMN, Illumina. This one I mentioned earlier as a possible setup. I will say, though, that of their last 6 quarterly reports, they've split. 3 have gone higher, 3 have gone lower after earnings, but they did have 2 really big spikes. Last quarter, you can see right here, this gap up 12.1%. And then back on, or actually 12.1% was, not sure which one. I'm showing 14.8% here, August 1st. I think maybe this one, or maybe it was all the way back in August. Oh, it was August of 17. This one was 14.8%, and this one was 12.1%. So pretty good history on Illumina in terms of occasionally having some really big moves to the upside. And you can see that the stock was weak last time heading into its earnings report and still managed to gap up on very strong volume. So for those of you interested, ILMN could be a pre-earnings play. I don't like doing that. I think that it's more like, I don't know, Russian roulette, playing with earnings. But for those of you who enjoy it, it probably doesn't hurt to know the history going in. Boeing has split the last 6 times, but the gains for the most part have been larger than the losses. So when you look back at the past 6 quarters, Boeing has actually had 3 moves higher. One was 4.2%, one was 4.9%, and the other was 9.9%. So, and you can see that one back here in July of 2017. So Boeing has a pretty good history of moving higher with its earnings, and it seems to be telling us that they're going to have a good, solid earnings report, as we did just see a breakout in Boeing. UPS has gone up 4 of the last 6 quarters. The last 2 were very solid moves to the upside. We saw UPS go up 6.9% with its earnings back in July. And then if you go back to April, it was up 4.3%. So this pullback down here near support, a couple weeks ahead of earnings, we could maybe see another run up here in UPS based on its recent history. General Dynamics. I know defense stocks have started to pick up a little bit, so I thought I would take a look at GD, but it is actually split the last 6, and you can see many of the defense stocks went down after their April quarter, and General Dynamics was no exception, and really just mostly sideways consolidation, though, for the last 15 months or so. Vertex Pharmaceuticals, VRTX, just got maybe another handful of these. You can see the breakout taking out the March high. Sideways consolidation just broke out again. Vertex, though, has gone down 4 of the last 5 quarters after its earnings report. So keep that in mind. Amazon, ever heard of that company? AMZN. They have gone up 5 of the last 6 quarters, but the only big move was this one back here in October of 2017, and that was a 13% move on Amazon. But you can see some pretty good reports. This one, we got a pretty big gap up in April of 2018, but you can see it sold off after the gap up. So the actual gain that quarter was not very substantial. But it is noteworthy. Amazon has gone up 5 of the last 6 quarters after its earnings. Microsoft has gone up 3 of its last 4 after earnings. You can see Microsoft pulling back here over the past few days. And stock was 116, 117 middle of last week. Now it's down 110. So nice little pullback for those of you who like Microsoft. And again, 3 of the last 4 quarters, they have moved higher with earnings. Google, last 6 quarters have been about even. Actually, 3 up, 3 down, and gains and losses have been about even. So we've seen some where we've had pretty nice push to the upside, nice big gains. But if you go back, you'll see that there have been some others where we have seen movement to the downside on Google. So you want to be careful with Google. There doesn't seem to be any kind of a historical bias there. And then the last 2, Intel, which we talked about a little bit, well, we've been talking about Intel quite a bit recently. I was surprised. Intel, and this is one I got stopped out on as well. This one was not on my strong earnings chart list, but I did like the technical break back up above the 50-day moving average. And then we went right back down, lost gap support right back below the 50-day. So I ended up getting stopped out for a fairly small loss. But nonetheless, the technicals didn't hold up there on Intel. Intel's last 6 reports have been kind of mixed. Last quarter, you can see right here, fell 8.6%. The quarter before that, back in April, was mostly flat. It gapped up and pulled back, so it was primarily flat. And then the quarter before that, we saw the huge move back up in January, went up 10%. So Intel's kind of been a mixed in terms of its earnings reports. And then the last one I have is BIDU. BIDU has, if you're looking for action, BIDU might be the one. I'm just going to tell you the last 6 quarters, and we're seeing BIDU break down, by the way, below all these previous lows, and it's in that internet space, which is really struggling right now. But the last 6 reports, BIDU has gone down 7.7%. It has risen 5.6%. It rose 4.6%, went down 8.2%, rose 9.5%, and then went down 4.1%. So over the last 6 quarters, we have seen it go up 3 times, down 3 times, but the moves have all been at least 4% or more. So BIDU is probably setting up, and when you look at it, 4% on a $200 stock, we're only talking about $8. But you know, the one move was almost 10%. That'd be a $20 move on the stock. So anyhow, BIDU is the one of all those that I just gave you, seem to be the one that was the most volatile in terms of its movements back and forth. Seems like almost every month we have, or every quarter, we have some kind of a surprise out there with BIDU. So let's pull up the summary of the stocks we just covered. And again, I wanted to give that to you. I told John I would take a look at this because he is starting a free newsletter at earningsbeats.com. And I think he'll provide something similar to this, except give you charts, maybe similar to what you saw on that WW Granger chart, GWW, where kind of listed out the EPS. I'm not sure really what he has in mind. But anyway, if you are interested, just remember you can send him an email, john@investedcentral.com. And Invested Central, by the way, does business as earningsbeats.com. That's why basically the 2 companies are the same. Anyhow, that is your earnings spotlight for this week. John, I believe, will be back in a couple of weeks. Look forward to having him on then. And I guess now, Erin, we will move into the 10 and 10.
Indeed, we shall. Let me go ahead and show you the RRG and mainly what sectors we're looking at. But here's the RRG. We've got one big outlier, so we'll probably be looking at AMRN just to let everybody know, because that just looks interesting. I want to know why it's doing that. But I thought what was interesting today is definitely an increase in interest for consumer staples as far as requests. And then we did have kind of a resurgence of technology. That one hasn't been as most people haven't been that interested in that until today. So I always find it, kind of informational and interesting to see what our viewers are requesting. I think it gives us a little bit of a pulse on what people are thinking about right now. So let's
Mhm.
go ahead and get started. L Brands.
All right, L Brands. Well, I'm not a big fan. Looking at the chart here, you can see that there's a couple of items or a couple of levels that I would be watching to the upside. Now, today we are trying to put in a reversing candle off the downtrend. We'll see whether or not that sticks into the close. But I don't really see any major support levels around here. So it's not giving me any, I like to see these reversing candles when they're at a major support level, because then I feel like, okay, other folks will see it as a buying opportunity. And that just isn't the case here at this level. But looking above, I think you can see, first of all, we had gap resistance. We went a little bit above it here, the bottom of gap resistance, but we still have the top to negotiate, which is up close to $32. And then you can see we had a double bottom. We gapped beneath. And when we moved up and failed to hold, you can see we tried to get back through that resistance area. And when we pulled back, the PPO had gone positive. So what I would have been looking for is holding that rising 20-day moving average, but we didn't. And we fell back down below it. So I think this is a failure, a technical failure on LB. And so I believe we could be resuming the downtrend. And so I'm going to avoid L Brands at this point.
Okay. The most popular in the chat room, and I suspect people are going to want to know whether they should hold it, buy it. Adobe, ADBE, a lot of interest there.
Yeah, I like Adobe, but it's like a lot of the other stocks out there right now. We're seeing some of these stocks breaking down. And so on the daily chart, we're having a reversing candle would be great. If we get the stock down 248 today and we close back up that 50-day moving average, which is all the way up at 260, and leave that long tail to the downside. I mean, when you go back, look at this long tail here where we had the reversal. We went back up above that 50-day moving average. That started a major uptrend. And with earnings coming up, I wouldn't be shocked to see something like that. Now, that doesn't mean I would just jump in here and hope that we get the reversal. I'd like to see it first. So technically, I would just be watching this area of support, because we did have a prior low, actually a couple lows that came in within maybe $2 of each other, 255, 257. And then you've got that 50-day moving average. We went below that intraday, but if we can reverse today with the PPO near that center line support area, that might be enough to get me back into Adobe system. So let's see how we close on it. You got the next one, Erin? Did I lose Erin?
All right, let's try that again. I thought I had unmuted. My bad. AMRN. It's a pharmaceutical. That's the one that was the big outlier. So let's try that one.
Okay, yeah, I think we might have looked at this one not too long ago. I mean, it's the problem is with a stock like this. I mean, it's a great performer. If you're in it, congratulations. But the problem is, where do you set a stop if you get in? I mean, if you're sitting on the sidelines looking for entry, where do you put your stop? And that's what I have a problem with this particular stock. You can see after gapping up on very, very heavy volume, I mean, from $3 to 10 and something, you can see the pullback came down to about 9.5. So there's no doubt you've got great price support there. But the stock now is up at 1880. I mean, chances of it moving back down to that level are not very strong, or at least not anytime soon. So where do you find some support? The rising 20-day moving average, of course, it's taken a long time because the stock was so low. It's just now getting through $12. It is rising rapidly. But I think for me, what I would do is be looking at the most recent breakout in price, which here was the move up. We finally had a little bit of a pullback. We got up to over 18. We pulled back to 15, and then we broke back out above this candle body at around 17. So I think if I was looking for a short-term area of support, it might be right at about the $17 area. But just keep in mind, you're taking a very big risk on a stock like this that's moved up so much. And if you keep an intraday stop, market makers could have a feast with you just because of the inherent volatility that you're going to see with a stock that's moved up so fast. So this is a tough call, but for those who believe we're not going back down to 9.5 to 10.5, and I kind of agree with you, we probably will not. You look for other levels, and 17 looks like maybe the first level that I might be interested in trying to take a shot here.
Okay. Next one up will be GEL, Genesis Energy. It is our only energy request today.
All right, GEL. Well, I like the overall pattern. Nice little trend to the upside. I think we're holding on to this trend line support too. So just from this low to this low, I mean, you can see that's pretty nice trend line support because you got multiple tests along here, several almost near tests. But I would say the combination of that trend line support and price support. So these recent lows have come in at about 23.5 right here, double bottom. Some might look at this, say head and shoulder pattern. I don't look at it that way unless we break down. Head and shoulder pattern isn't really a pattern until you confirm. So I would, and a move back through 25.5, by the way, would negate the pattern. So I see lots of potential head and shoulder patterns during uptrends, but rarely do they confirm when you're in a bull market. So here I would just continue to watch this trend line to the upside. 24 provides you pretty good support there. Great price support around 23.5, and currently the high up at 25.5. So we're range bound, but I do like this. I think it goes higher.
Okay. How about consumer staples, tobacco company, PyXS, PYX?
All right, PYX, nice breakout today and very heavy volume. Can't really argue here. Unless you get a big reversal and close down below this support area, because this is a quadruple top here that we pull back from, go all the way back into this gap support. And by the way, here's a stock that went from 13 to 30. And we think, okay, it'll never get back down in here in the gap support. Well, it doesn't immediately, but it did eventually 4 or 5 months later. So thinking back to that AMRN, that's one, just kind of keep in mind that maybe over time we do work our way back down toward that 9.5, 10.5 level. But anyhow, looking at this stock, beautiful volume to confirm this breakout here. So I look now, I'm going to say the gap support down here at the bottom, 28, and then this prior high, which looks like around 29.5. I think that's the key area of support on a pullback. I would be a buyer back in that range, but I like the chart. I like these high volume breakouts.
All right. How about Camping World Holdings, CWH?
Yeah, this used to be on my strong earnings chart list. I don't think, it's been downtrending for a while, so I don't remember it, haven't seen it in a while. So I'm thinking probably it struggled with one of these moves lower. But anyhow, it's trying to hold on to support around $18. It's been in a downtrend for a while. I'm seeing almost like this descending triangle here. That was the low. You can see equal lows here, and then the descending lows on this recent downtrend right here. So here's the problem. You've got, and actually we'll see if we have a reversal. If we fail to hold this breakout, if we move above 22 and we can't hold it and come back down, leave a tail above it, I think you've got a really bearish pattern. You've got a downtrend followed by a descending triangle, which is a continuation pattern. So I would be looking for another breakdown here on the stock. Now, if we can get through 22 and get some volume coming in, then maybe we have a shot at 26.5, 27. But still, that could be rectangular consolidation after a downtrend, which could still also be a continuation pattern. I think CWH has a lot of work to do technically before I'd be interested in it. So I would avoid it. I don't like it here, even with today's action higher. I would be avoiding the stock.
Okay. Canada Goose Holdings. Mary Ellen talked about this one. Our viewer wants to know when would be the entry here? GOOS.
Yeah, this is one that I think has got pretty good support in this gap zone, and it has been sideways consolidating now for a while. but it's also under heavy selling pressure. I mean, this is a stock that's gone up quite a bit in 2018, and these are the stocks that are getting hit the hardest right now. So with it, continuing to move lower, we have not seen a higher high go in over the course of the last 6 or 7 trading days. So until that happens, I wouldn't even touch the stock. You do have some support down around 50, and then you're going to have this gap support around 46. So this is a level that maybe you might get interested to the upside. You've got to go all the way back up to about 68. I just don't see I don't see an opportunity to set up a good solid reward to risk entry into the stock here. I think as you get closer to 50, you could take a shot there. You could almost have a strategy where you buy in 2 places, 50, and then again at 46, keep a fairly tight stop underneath that, looking for a turn before we get down below this gap support level. But Goose, to me, right now, I don't see a trade.
All right. Consolidated Freightways, CF.
All right, CF, nice uptrend in play. We do have a negative divergence, so just be aware of it. Doesn't mean that we would necessarily see a big sell-off, but we could. Here is, and actually the negative divergence started way back here, but I could draw it from these highs, or I could just draw it from these highs, which is what I'm going to do. So just over the past 5 weeks or so, you can see the higher prices, definitely can see the lower PPO. So you got a negative divergence, but the volume has actually been pretty decent on the move to the upside. So what I would do if I was in it, I would continue to hold it as long as it closes above the 20-day moving average. If you've been in this one for a while, I think this was a setup that I had a while back. And actually, I traded this one around this level at about 47. But this is a stock that I would continue to hold and let work for me until it fails to hold that rising 20-day moving average.
All right. Last one, or not last one, second to last one is going to be ICE, ICE.
Yeah, this one's in the financial area. We had a false breakout here. One of the things I wouldn't want to see is when you make a breakout like this off of above major price resistance, I want to see volume escalate. We saw here on the breakout back in July above these prior tops, no volume, and we ended up going right back down. Then as we get back up to this resistance level, as we break out above 77, look at the volume coming out of the stock. That's not really what you want to see. You want to see volume picking up. And again, we came back down. So I think overall, I think we have an uptrending stock, but it's really hard to play it on these breakouts. I think what I would do maybe is, let's see what this trend line, where this intersects. But if we come back off of the lows, well, we could draw a trend line like that. Or, and this is the beauty of trend lines, you can just kind of make it whatever you want, which can be dangerous. But here you can see also trend line. This one actually has more tests along it. I'd feel a little bit better about that trend line, and then also the recent lows providing support. So I'm going to say 72.25 to about 73.25 is probably the key support area on ICE. So watch that to the downside. As we got closer to that, I think you could set up a nice reward to risk trade. Until then, right now, I just don't, unless you're going to use the lows from last week as a support area. I really don't see a good solid reward to risk trade at this point.
All right. Final one on the list, Quinn Street, QNST.
Yeah, this is a media agencies company.
Part of the new XLC.
Oh, yeah, that's right, because media agencies did get moved over there. You're right.
Mm-hmm.
So far, it's turned around on the most recent price low. So I do find that to be somewhat encouraging. But this is what I was referring to. You can see the heavy volume here and the selling. We got to close down at 13, did not close below it, and went right down to that 13 level and started to turn back around. So this is the range that I would trade on the stock, 13 up to about 1610, 1620. So the closer you get it to 13, the better the reward to risk on the trade. It's okay at the current price, but I'd like it better if it maybe dipped another couple percent, just so I could set my reward to risk up a little bit better.
All right. And that concludes the 10 and 10. And here are the symbols that we just went over. I will have those charts, those exact charts that Tom just annotated, in the Market Watchers live chart list. And you'll find that on the Market Watchers Live blog page. So you just go there and the link will be right there at the top. All right, time for our final market update. All right, let's check out the candle glance and see what is going on. This is a 3-day chart, 10-minute bars. As you can see, we are continuing the declining trend that we have been in for a couple days now. The market made that attempt. You look at the Dow and the S&P, NASDAQ, they all opened lower and then made that attempt and got into positive territory for a very short time, but have now pulled back, and we're seeing the intraday lows from Friday now being broken. And intraday lows still being set on NASDAQ, S&P 100, mid caps as well. Mid caps and small caps have been hit especially hard as of late. They are following, it looks like, pretty closely to the large cap markets right now, but we have seen a lot more deterioration there. We'll have to see if they can hold the intraday lows from Friday, which it looks like they're almost able to do in comparison to the large caps, which have not. TSX is closed today, it looks like. We have the Treasury yields. We know the bond markets are closed, so we don't have a reading right now there. Big gap up for UUP, but now pulling back toward the open, but still up right now to 25.46 for UUP. Gold, big gap down, just as the dollar gapped up in the morning. Not surprised to see gold do the opposite, and is now consolidating mostly sideways, though. We're not seeing it rise, even though the dollar is pulling back. TLT mostly unchanged right now, but still at on the downside at 112.98. And finally, USO is lower on the day, but it does seem to be consolidating and settling at this current intraday low near $15.60 right now. And that's all I have for the final market update. Tom, I'm pass it back to you.
All right, sounds good. Yeah, I just want to take another quick look at the volatility index. This is an hourly chart going back over the course of the last year. But you can see that when we have had pullbacks in the market, that's coincided with these VIX spikes. So anybody who came in late didn't hear earlier, I just wanted to make sure that you're aware that the volatility index right now is up into this range where we have seen some pretty significant short-term S&P 500 lows, market bottoms put in. So if we can get a reversal on the VIX, maybe it's today, maybe it's tomorrow, maybe it's Wednesday, but I do think we are building up to what's likely to be a pretty significant bottom in the S&P 500. Now, things will get a lot worse if we can continue moving up and the VIX goes up, say, above 20. You can see that the VIX has a history even earlier this year getting up into this 24, 26 range. And back in the February lows, these tend to be major long-term market bottoms when you get readings in the 40s on the VIX. That doesn't happen very often. Normally, upper teens is where we mark bottoms in a trend, a bull market that's trending higher. Occasionally, we'll get a little bit deeper selling like we saw in March and April with the VIX getting up into the mid-20s. But I suspect we're probably getting pretty close here on the VIX. So let's watch this into the close today and over the next couple of days.
All right, excellent. Let's go ahead and move right on into the DecisionPoint Weekly Update here, Weekly Report. I'm going to grab this for you. I'll be going through quite a bit today. But if you hang on through this, you'll have quite the update. You'll know exactly what's been going on and what will be going on. I'll be covering the weekly and daily charts for all of the 4 DecisionPoint scoreboard indexes. We'll also be looking at the mid and small caps. And finally, the big 4, as I like to call it: dollar, gold, oil, and bonds. And then we'll finish off with our DecisionPoint indicators. So first off, I wanted to show you the DecisionPoint scoreboard so you can see where we currently stand right now. Excuse me with that. There we go. And, we did have, let me go back there for a minute. We did have a bunch of new signals coming along. We had all green scoreboards for a few days. And then we saw the S&P and the S&P 100 start to move back down and show some momentum to the downside. And currently, we're only showing those PMO sell signals on the daily chart for the S&P 100, but the NASDAQ got really hit hard over the last week, as you can see, losing 3 of its buy signals. And finally, the Dow Industrials, which had been holding on to a green scoreboard for quite some time, finally succumbed to a PMO sell signal itself. So let's go ahead and look at some of those charts. First is the Dow. And as you can see, we have a rising wedge, and you'll note I have pretty much marked that for all of the large cap indexes. I think the NASDAQ was the only one where I had a rising trend channel. But these rising wedges have now executed. And, if you want to go with a target, measurement and that sort of thing, it would put us below the February top. I just don't see us moving quite that far down, but just as a little bit of an attention flag for you. The measurement here is pretty large for this rising wedge. We're getting ready to come down and test support right there at that August top that we saw, and right here in mid-September, kind of lines up right there before the breakout. Coming back down, I suspect we will see a bit of a bounce here off of this area of support, but I am a little bit worried here about the PMO sell signal that has come in on the Dow. It's shown the most strength, and I don't like seeing weakness on it right now, as it could, affect the other large caps could be following along. Here's the weekly chart for the Dow, and you can see that breakout above when we set that new all-time high, pulling back. And what I'm going to be watching very closely here is this rising bottoms trend line. On the weekly chart for the Dow, we still haven't broken down below that, but it is very, very steep. It's going to be very hard to hold that particular rising trend alive. I suspect we're going to go back down and test that 17-week EMA. Not, of course, in the next week, but I would be watching for probably a little bit more sizable pullback over the intermediate term. If we can see this PMO turning back down. Right now, we're seeing the PMO on the weekly chart rising for the Dow. NASDAQ 100, like I said, we've all talked about how tech stocks are getting hit rather hard. I think that's very apparent when you look at the NASDAQ 100 chart. We do have that sell signal that I noted. The PMO, we found the 5-day EMA just crossed below that 20-day EMA. That's what gave us that neutral signal on the short-term trend model. You could make a case for maybe a sort of a double top here. And if we are executing a double top sort of formation here, I would look for a drop, at least to test this 7,200 level. I didn't think we would be, having to pull back to that level when we were up here looking at all-time highs, challenging those. But, it's been obviously a very difficult week last week for the NASDAQ 100 with the breakdown. And now we're seeing trading going on below that 7,400 level. I would look for a move to test that 7,200 level, but you can also see some support rising right here at that 7,300 level. If you just want to consider that right now, testing that little area of short-term support, you could look at it that way as well. But PMO sell signal, we're looking at lows on the PMO as far as readings well below previous lows. All right, the weekly chart for the NASDAQ 100, there's our sell signal that did come in on Friday. You can see that rising bottoms trend line that we saw on the Dow is being broken on the NASDAQ 100. OEX, S&P 100, testing some support right here along that January top. I am expecting with the breakdown from that rising wedge, I would expect at least a test here of this less steep rising bottoms trend line. The PMO has been really flat during this move to the upside. And, that's generally not a really horrible thing to see when you're having pretty much steady acceleration. That's what you're going to get, is a more flat PMO. I don't like that PMO readings, though, now on these large caps are starting to get below those near-term lows that we saw back in August and September. S&P 100 weekly chart, rising trend channel, testing that 1275 area as we saw in that daily chart. But there you go, the bottom of this rising trend channel is still well below the support level we're looking at right now. So we could still hold on to a rising trend, but still have to fall and test some, some very low levels that maybe we didn't expect to have to test. And right now I'm looking at that 1250 area for the OEX. There's your PMO, which is topping, not a good sign either. S&P 500 breakdown from a rising wedge, just like you were seeing on the others. PMO readings below previous lows, another problem. And notice here on the OBV, we drop below these top bottoms and tops we had here in that little consolidation range, and now are heading back down. It'll be interesting to see how volume comes together at the end of the day. It is somewhat of a holiday, being Columbus Day. I think some schools are actually off, so the volume may come in a little bit lower today, but it'll be interesting to see where it brings down that OBV. The weekly chart for the S&P, we've broken below that area of support that I had here marked. It looks like actually we could bring it down just a bit, but we are testing that area of support at that January top, which we saw on the daily chart. Now we look at rising bottoms here on a longer rising bottoms trend line here, a nice rising trend that we're still in. But again, we're vulnerable. We can keep that rising trend, but still have to sustain, a large pullback or correction. Not liking the PMO topping here either. Let's look at the mid caps real quick. Mid caps and small caps definitely taking it on the chin. Right now, I'm watching very closely this 20-50-day EMA. We're getting ready to have a negative crossover today. That would trigger an intermediate term trend model neutral signal for the S&P 400. Already have a PMO sell signal, and you can see PMO is starting to move into that oversold territory, but it still has more room to go, can accommodate more downside. Right now, this is the important area of support, I'd say, right at that March top. You can see a few top back here in May. A low back here, the 195 level I would be watching closely, but given what I'm seeing on the chart, I would expect it not to hold that. We're right now testing the bottom of a rising trend channel for the S&P 400, and we have a PMO sell signal, and we want to hold on to that rising trend. If we lose that rising trend, boy, I'll be re-looking at this one. But my hope, of course, is we're going to manage to maintain that rising trend. Certainly has held up, since 2016 when it started to develop here at the end there of 2016. So Russell 2000 ETF getting ready again to test very important support right here at the 200-day EMA. PMO on a sell signal. We're getting down to oversold territory, as you can see, very close to the previous low, but we are still moving down. The PMO does not look interested in decelerating right now. We could end up seeing a breakdown below that 200-day EMA and these tops we saw back in January and February. The indicators are telling us that certainly could happen. Let's look very quickly back here. I need the weekly chart for you for IWM, coming down to test the bottom of the rising trend channel, just like you saw pretty much on the S&P 400 as well. Okay, let's look very quickly at our indicators. Last week when I spoke to you, we had them rising out of oversold territory. Right now, we look at tops below the zero line for the STOB and just nearly below the zero line top. And that's very bearish in the short term. Certainly don't like the look of that. But, we are still kind of near term, excuse me, there we go. We are still sort of reaching that near-term oversold. We don't have to go quite so far down to get into oversold territory. So, we could see it turn right back up here, but right now, short-term indicators are bearish. Intermediate term indicators, I think, are quite bearish as well. I wouldn't go so far as say very bearish. We finally broke the rising trend. We're getting ready to reach the zero line. If we get below the zero line, then I would say, yes, we're looking at very bearish indicators. However, you know, they have managed to turn up right in this area. So we could probably accommodate a little bit more downside action in the intermediate term. Start looking for that to turn up, though. We'll have to see what the market is the strength going in on these intermediate term indicators. Right now we're not looking too good. If we get below the zero lines, I'll start to get a little bit more concerned. But intermediate term, certainly bearish, but I'm not going to go so far as to say very bearish at this point. All right, let's look at the big four, UUP. And there you go. Nice breakout on the dollar. Currently, it's still riding high. We've got the PMO buy signal. Look at the OBV readings are reaching highs we haven't seen most of this year. Straight up scooter move. I would expect to see the dollar continue its rise and at least for UUP test that top back in August. And there you go. I think it could even move past that top in August. I'm looking back here at this 2010 top and seeing where that might come in. We didn't reach it back here in the third quarter, but maybe we might be able to get up there and test it this time around. Look at that nice bottom above the signal line for UUP as well. So I'm feeling bullish there. Bearish, when we look at gold, we still have bearish sentiment here. Everything is lined up for gold to do well, and it has been lined up, but it just isn't really performing like I would expect to see it. You have it decoupling from the dollar. As far as correlation. So that gives it the opportunity, even if the dollar is rallying, for it to do some rally on its own. It's not going to be, if we're going to decouple in that correlation, it gives it that opportunity. But, we're not seeing that. It's still consolidating mostly sideways. But the PMO is still moving up. We had a bottom above the signal line, so I have to continue to be in the bull camp for gold. I'm really disappointed in it. All right, and there you go. See how bearish the sentiment is. PMO is now starting to turn back up. It's holding this support area, which I think is very important based on all those touches. You know what? It's set up to do well. We're just not seeing it perform like it should yet. USO, we're seeing a pullback in oil prices right now, and that's causing the PMO to top. I suspect we're going to hold support here. At worst, go down to the 1475 area, and clear some of the overbought conditions here on the PMO. But looking at a high scooter rank of 99, I can't get too bearish here on oil. I do see the pullback in the short term. And it could become a little bit more deep as far as a correction and still maintain this rising trend channel. But we have the PMO buy signal. We are due for a pullback here on oil, but at this point, we're still in a rising trend. We're coming into the fall with some buy signals. I'm still looking for a bounce off of support if we do pull back a bit more on USO. All right, TLT, I continue to be extremely bearish on bonds with the rising 10-year Treasury and other yields, bond yields rising. We are going to see bonds continue to be hit hard. The double top executed, it's now actually reached its minimum downside target already at about 113. So let's look at the weekly chart. And there you go. Head and shoulders, rising neckline, and it has executed this head and shoulders. And when I calculated down the downside target here, I went with, it brings it right down here, right to that $90 range or just below to test these 2013 lows. I think we could see it. I don't think bonds are in a very good position right now. and I don't think they're going to get, I don't think we're going to see prices rise yet for quite some time. Here's an opportunity right here at the low back in 2016 and the high back here in 2012, but I don't know, it's looking pretty bearish. Look at that sell signal. And as you saw in the daily chart, the double top, this head and shoulders. I can't expect much out of bonds here for a while in the short and the intermediate term. All right, that concludes the DP Weekly Report. Here is a summary of what I went through. Large caps, I'm not going to read all of these to you, but basically seeing quite a bit of weakness as rising wedges have executed. All of the rising trends are being broken. The scoreboards are starting to flip. I would expect to see more downside. However, I do have the VIX. Actually, I'm going to throw this one up there really quickly. It's important. I've been watching the VIX and the Bollinger Bands here, and while I'm figuring lower prices coming in, I think it's time for that bounce. We've extended ourselves on the VIX, so continuing through into this week, I could see a little bit of downside, but I think we're going to get a bounce or some kind of a rally pop just to clear this out and get the VIX back up toward its average. So that's why with Monday setups, while I see possible upside coming, overall there is some downside. But Monday setups, I didn't go with shorts because I was seeing the VIX so extended. So in a very short term look, I'm bullish, but after that, we're starting to look pretty bearish. And let's go right back quickly here to the summary. And again, I won't read it. We did the mid caps and the small caps. Our decision point indicators are bearish right now. The dollar is looking good still for rally, and gold should be starting to do some rally with that decoupling. It's just not happening right now. And oil still, we're topping. It's time for a pullback. I don't think it's going to get too difficult. The pullback to the breakout point at 1525. All right, 30-year bonds, there you go. Continuing to look very bearish. That concludes the DecisionPoint weekly review. And that's all I have. Whew, I made it in time. I didn't short shrift the big four this time either, Tom.
There you go. Let's bring up that poll if we can, just for a second or two.
Yes.
So we can take a look at the different indicators. Now, of course, we only have 6 choices, so we couldn't get everything on there. I saw that there was no PPO because that's what I probably would have gone with. But seems like most folks out there, more than 50%, RSI is their favorite of the ones that were listed.
Right.
And PMO second.
Well, I know actually technically the OBV isn't an oscillator per se. So we could have thrown that one out and put the PPO, but I would say PMO, PPO, they're kind of the same as far as this poll goes, but very nice to see my PMO up there near the top. Definitely like that.
Yeah, I think the characteristics of the PMO, PPO, MACD, they're all pretty similar. Without a doubt. Okay, well, we do still have kind of a weak market. Just to wrap up quickly, I mean, I do know the Dow Jones still down over 100 points. NASDAQ down 122 today, though. Wow, just another huge decline on the NASDAQ. Looking for a potential top in the VIX and the VXN, but so far, don't have it.
No.
We'll see. Anyway, I do want to thank everybody for stopping by today. Hope everybody had a great weekend. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Go Redskins tonight, and we'll see you back here tomorrow. Happy trading.